The Lagos Chamber of Commerce and Industry (LCCI) says Nigeria will require disciplined policy making, clear direction and strong private sector resilience in 2026 as the country continues to face macroeconomic pressures. This assessment was made at the Chamber's 2026 Economic Review and Outlook Conference, where business leaders, policymakers and economic analysts reviewed Nigeria's 2025 performance and discussed prospects for the new year. Speakers agree that the era of easy economic adjustments is over, stressing that recovery will depend on difficult decisions, sustained reforms, and predictable governance.
Other people have an opinion, we need to look at it. We know that equity too is an assurance for more enduring investment. In other words, not for short investment, it's for investment that you can plan on. That is a thing that we need to really look at. I am not an idea that when people put out the idea, you put it down. We need to really consider it and see the best option.
We expect a lot of regulatory reforms, a lot of regulatory changes. We expect that regulators will be a bit more pro-business and pay attention to business issues. At the Chamber of Commerce, we will expect to see a few more engagement directly with the regulators. And once we are engaging with them properly, then the stakeholders get to know. If there are changes, they get to know early. And if there are things that the stakeholders don't understand, the regulators will get feedback also quickly. So we expect better engagement with the regulators, and that will ease the business challenges.
Meanwhile, the LCCI and chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, Taiwo Oyedele, expressed optimism that Nigeria's new tax laws will stimulate growth, investment, and job creation. Also speaking at the conference, Oyedele says the reforms were designed to fix a tax system that previously discouraged investment by taxing capital rather than profit. He explains that the reforms reduce corporate income tax from 30 to 25%, remove minimum tax, and allow businesses to recover VAT paid on assets and services.
We collected the data from the market. It turns out that the average value of a deal for that day, I think we had about 20,173 deals, worth about 25 billion naira. The average size of a deal was just about 1 million. The new tax law exempts you if you sell up to 150 million. People who were selling 1 million were rushing to the market to go and sell because nobody said to them that they have been exempted. More than 99% of investors in the capital market are exempted, no conditions attached. The remaining less than 1% are exempted with condition. The condition is when you sell, please reinvest and reinvest because we want them to take a long-term position in that market. So actually everybody is exempted. You know that our younger people, they have over $60 billion in virtual assets. Crypto here, stable coin there, that's what they are buying. I don't know if there's any single one of them that's invested up to $10,000. It's usually $200, $150. Those things add up, right? In the capital market, the average age of investor is over 50. There are old people like me that are there. Yes, the young people are not investing there. And we're not telling them, instead of us to tell them that the capital market has now been designed for you, you can invest there and you won't have to pay tax. This is your crypto and virtual asset. It's even taxable. But when you come to the market, you won't pay tax. But we scare them away with our narrative. There's 30% tax on the market. The danger of misinformation.
The 2026 Economic Review and Outlook Conference of the LCCI ended with calls for policy consistency and collaboration between government and the private sector to stabilize the economy and restore confidence in 2026.